You're just back from the B20. The global economy is pretty fraught politically and economically. What insights did you come back with from that?
Really what came through was that the, I guess, prolonged issue that we've had with low interest rates, an appreciating US dollar and low oil prices was still top of mind. I think the takeaways were that the US economy is actually doing much better than was probably thought to be possible by now. And I think that there was a real consensus that the Fed needed to raise rates just to take away the uncertainty, and certainly that was a message that was delivered quite strongly to the US. And I think the other thing is that the hysteria that emanated around China's slowdown is very much overblown. The Chinese actually did admit that they'd made some errors in terms of their process and execution in terms of how they've dealt with the stock market and the devaluation of the renminbi. But they've still got an awful lot of levers to pull.
Is there a difference between how the Northern Hemisphere is viewing China and how, say, the region is?
I think that's absolutely true. And in fact, I think it's not only Northern Hemisphere, I think it's a US perception, which quite clearly is quite extreme, into Europe, which is a bit more measured, into, I think, into Asia, where it's much more pragmatic and I think a much better level of understanding. Fundamentally, I think the issue that has really happened is that the restructuring of the SOEs has not perhaps gone as fast as possible, and I think therefore that some of the financial deregulation has not happened quite as quickly as it could have done.
ANZ has obviously got some of the highest exposures out of Australia to the region. Can you give us an idea of some of the ANZ's credit exposures in Asia, particularly China?
Look, China only accounts for about 3% of our total outstandings as a group, which is very small. But the significance of that is that 88% of our exposure to China is of a tenor of less than 1 year. Which basically means that should there be issues, our ability to actually reduce our exposure is very straightforward. So I'm absolutely not worried about our China exposure. It's actually much higher quality than the rest of Asia, New Zealand, or indeed Australia.
But given the, I suppose, the expected risk emerging in Asia, is ANZ getting enough return on exposures in the region?
Look, I think the important thing to understand here is that we have a very high quality exposure, and therefore return is always going to be a little lower than if you were to go up the risk curve. The alternative in terms of the institutional bank would have been to look for growth in Australia at a much higher risk. We have not done that. We have really cleaned up the book. The credit quality of the group is probably better now than it ever has been.
Do you get the sense that some investors are thinking the ANZ may well stumble going into Asia?
Well,
may get the wobbles?
Yeah, look, I think we've been in Asia a long time, and I think that the way that we have actually gone into Asia and have built our business there has been based on local knowledge on the ground. And I think people don't truly understand that. This is not about just booking assets where you don't really know the underlying quality. You've got a business that really understands what's going on. And a good example of that was the Qingdao port scandal recently, where a number of banks, including some Australian banks, got caught out. We didn't. We didn't lose a penny on that.
Just going back to Australia, the bank's increased its general provisions for bad debts in the last trading update. Are there any hard signs emerging of problem spots?
I mean, I think you'd expect there to be a little bit of hardship in mining services off the back of commodity prices and the resource investment boom being over as it moves into a production cycle. Therefore, there isn't going to be the same amount of work around. But again, our exposure is very small in these areas, and we've done an awful lot over the last few years to reduce that exposure. Looking at where we stand today compared to where we were pre-crisis, we look like a very, very different bank. You know, we have a very strong balance sheet, a very good credit book, and a very good capital position.